Tiffany says, if I am already contributing more than the 35,000, shouldn't really be contributing more than the 35,000, Tiffany. The 9% SG into super and not salary sacrificing. If I'm already contributing more than the 35,000, the 9.5% into super and not salary sacrificing, what can I do to avoid paying the tax that the government makes me pay every year for being over the $35,000? Oh, the key thing there, Tiffany, is to just understand that your $35,000 threshold includes your superannuation guarantee. Let's have a quick look at that though, just for any others that are interested in that one as well. So how this works is, say for example you've got an income of $100,000 and your employer pays superannuation guarantee on top of that. It's 9.5% of that, or $9,000. $9,500, sorry. That means the amount that you can salary sacrifice without going over the limit and being penalised for it is the difference between $9,500 and $35,000. So if on $100,000 income, then you could salary sacrifice, what's that, $25,500 into super. If you were actually salary sacrificing $35,000 and your employer is putting in $9,500, then you're going to be exceeding the annual limit by the SG amount, the $9,500. And you're going to, what happens with that is that it's effectively taxed at your marginal tax rate, which is, it's okay. If you didn't salary sacrifice it, you would have been taxed at your marginal tax rate. So that's okay. But what happens is you pay a penalty interest rate on this $9,500 from the 1st of July of the year that you put the money in. So let's say it was the 1st of July 2014 through to, so now this is the end of the year, end of the financial year, so the 30th of June is here, 2015, so that's the financial year in which the 9.5k went in, but you don't submit your tax return until, let's say, March. You'll get charged the penalty interest rate on this $9,500, and I think it's around the 8 or 9% mark at the moment. It started off being, when they introduced this, the way of penalising people contributing over the thresholds, it started off being about 5 or 6% interest rate. But you pay I think it's around 8 or 9% interest rate from the start of the financial year in which you made the contribution. So you may have only made the contribution here, but you pay the tax on, or you pay the penalty interest rate on the $9,500, even if you put it in here, close to the end of the financial year, from the start of the financial year. So from here all the way through until you submit your tax return. So if you don't submit your tax return until March or May or something like that, you're almost paying 2 years of 8 or 9% interest. Let's say it's round figures, it's a 10% interest rate. You end up paying tax on 950 times 2. I know I'm exaggerating things a little bit, not being accurate with my tax rates, but 950, so $1,900 in penalty tax by doing it. So Tiffany, the key thing here is that don't go over the limit. Don't salary sacrifice $35,000. Salary sacrifice $35,000 less your superannuation guarantee, if that makes sense. If you want to put additional money into super over and above the $35,000, you can do it, but you don't do it in pre-tax dollars, you do it in post-tax dollars. So there's two contribution limits. There's the $35,000 concessional contribution limit, and there's $180,000 non-concessional contribution limit. And this is with after-tax dollars. So you've got money sitting in the bank, you just put that money into super, and then it's there's no tax paid on the way in, and it's a whole new different threshold to the $35,000 threshold. Hope that helps.